Thank you, Minister Griffith, for your strong and supportive words. To continue with our interesting agenda, I would like to introduce the host of this Chile Day, Mr. Mario Marcel, Minister of Finance of Chile under the administration of President Gabriel Boric. Mr. Mario Marcel was the former governor of the Central Bank of Chile from 2016 to 2022. He has a bachelor's degree in business administration from Universidad de Chile and a PhD in economics from the University of Cambridge in the UK. Previously, he was director of the Global Good Governance Practice of the World Bank, deputy director of public governance at the OECD, and manager at the Inter-American Development Bank. I have to say you that following the minister's presentation, Michael Stott, Latin America editor for the Financial Times, will join him for an open conversation on developments and prospects of the Chilean economy. So now, let's give Minister Mario Marcel a warm applause.
Good morning, everyone. It's great to be here back in London, in this wonderful venue and in a snowy early winter day. Given that this is the 11th Chile Day in London, I believe that I have attended half of those Chile Days, previously as Governor of the Central Bank, now as Minister of Finance, so it's a great pleasure to be with you again. I will speak about the Chilean economy, but not only in terms of its current macro developments, but also looking ahead at the opportunities that the country is offering now. And I think that with that we can have an interesting conversation later. First, on the recent macro developments, we should start by saying that Chile emerged from the COVID-19 crisis in a very strong way, but it was done on the back of massive fiscal transfers and pension fund withdrawals that overheated the economy, which was evident towards the second half of last year. And this added to inflation pressures that many other countries were facing in the last year or so. This was reflected in growth that went beyond our productive capacity. So we had a positive output gap of more than 5% by the end of last year. And the current account imbalance moved towards closer to 10% of GDP. So those are figures that were unheard of in Chile for a long time, and it involved imbalances that we needed to address head on. And this was done in the first place by the central bank that started raising interest rates already in June last year. And since there until now, it went up by from 0.5% in the policy rate to 11.25 recently, before pausing as announced by the central bank in the last couple of monetary policy meetings. So we started early on normalizing monetary policy and then moving to restrictive territory. We did that very swiftly, and the governor of the central bank will surely speak more of that later. But in addition to that, fiscal policy moved from a pro-cyclical behavior towards fiscal consolidation in a matter of 1 year. This year, we will move from an overall deficit of nearly 8% of GDP to an overall surplus close to 2% of GDP. So we will move away from the twin deficit scenario that we had last year. And this will help to bring the economy to stabilization at a scale that is very unusual currently in the world. You can see in the chart on the right-hand side that Chile is undergoing one of the largest consolidation efforts, fiscal consolidation efforts this year. And this has been featured by a number of external observers, by risk analysts, by the financial media, by rating agencies and so on. And more recently, it was reflected in a reassurance of the ratings, of the risk ratings by two of the major risk rating agencies. So how is this effort at consolidation reflected in economic activity? Basically, after peaking in the third quarter of 2021, economic activity has slowed down and adjusted down in the course of 2022. Domestic demand started adjusting already by the end of last year, and has continued doing so ever since then. Economic activity is also adjusting. In the course of this year, we will have 3 quarters out of 4 with negative changes quarter on quarter, and that is allowing us to bring inflation down, as indicated by the inflation figures that we will see in a minute. But what is interesting about the adjustment of economic activity is that this has been led by private consumption, the same component of domestic demand that overexpanded in 2021. And what is interesting about it is that it is not dragging down in the same way other sectors of activity. So it's a pretty, let's say, efficient type of adjustment, where it is being concentrated exactly in the same aggregates that over-expanded in 2021 and that generated the inflation pressures that we faced. Investment is performing better than expected, with an expansion of about 3% in 2022. That is much better than what was originally expected for this year, but there is a lot of heterogeneity within investment, with investment in machinery and equipment growing reasonably well, while housing is adjusting down, and investment in technological infrastructure is leading not only the aggregate investment figures, but also the new projects that are coming to us. The labor market is still creating formal jobs, depending on the indicator that you choose. Currently, formal jobs are between 100,000 or 300,000 above the levels prior to the COVID-19 crisis, but labor demand is cooling down following the development of economic activity. So it will be no surprise to see if unemployment goes up towards the end of the year or the beginning of next year, but so far the unemployment rate has remained pretty stable for the last 6 mobile quarters at around 8% of GDP, which is 8%, which is pretty close to the historical average. And well, we have been talking about inflation. Inflation is the great protagonist of the economic stories this year. Chile is not an exception. And actually, in the case of Chile, in addition to the global inflationary pressures coming from commodity prices, from transportation costs, and from the appreciation of the US dollar, added the overexpansion of demand, which brought inflation to 14.1% at its peak last August, and since then it has slowed down, and we expect it to continue that way over the next few months until it converges towards the central bank target of 3% in the policy horizon of 24 months. But forecasts for inflation in 2023 point at closing the year close to 4%, which is a major adjustment in inflation and indicates the signs of consolidation on the fiscal side and on the effectiveness of monetary policy. The other side of the overheating of the economy, in addition to inflation, has been the current account deficit. As I mentioned, current account is peaking at more than 9% of GDP in the last four quarters, and that is explained by a number of factors, including the overexpansion of domestic demand, its concentration on imported goods, imported consumption goods, imported machinery and equipment, the worsening of terms of trade during part of the last year, on the increase in transportation costs and the decline on tourism earnings. So the services balance became pretty negative in the last year, and also on the reduction on copper production from physical conditions for copper production in the government or the public mining company. So all those factors combined to generate this overall current account deficit, and we expect that to normalize as we move ahead and as domestic demand cools further down and some of the factors that I just mentioned begin to normalize. Now, it is also interesting to note that as a reflection of the progress in the stabilization of the Chilean economy and some of the political developments in the country, economic uncertainty that shot up since the end of 2019 has decreased in Chile in the last few months, and it's currently close to pre-pandemic levels. That compares favorably with economic uncertainty, economic policy uncertainty throughout the world that has increased in the last few months, and it still has a lot of room for normalizing in the future. But of course, in the case of Chile, given that the increase in uncertainty started with the social unrest of the last quarter of 2019, we still have some room to improve. And we expect to continue making progress on that as negotiations around the new constitutional process moves ahead, as well as some of the issues or the projects in the reform agenda. With this decline in economic uncertainty, the risk premium component of long-term rates has shown a sharp drop since the end of 2021. Currently, the long-term rate on government bonds is well below where it started this year, and it is indicating a decline of this risk premium or term premium that pushed up long-term interest rates in Chile strongly towards the end of 2021 and the beginning of 2022. With this, the yield on 10-year bonds is currently at about 5.3%, well below the 6.5% or more than we saw in the at the beginning of this year. So how does the future of economic activity look like? These are the Ministry of Finance projections that are not necessarily identical to the central banks that were released only a few days ago. But basically, what we have been undergoing in the course of 2022 is a decline of economic activity. As I mentioned, 3 out of 4 quarters. But given that we started from a pretty high point after growing 12% in 2021, then this year will compare positively to last year. And the next year, when we will spend most of the year recovering economic activity quarter on quarter, we will have a negative figure, a negative overall figure for the year compared to 2022. On the table, in the table on the right-hand side, you can see how some of these aggregate indicators are expected to evolve next year, with economic activity returning to positive ground quarter on quarter, starting on the second quarter of 2022, and with inflation declining throughout the year. So even though some people have feared that 2023 could be a hard year for the Chilean economy, our view is that throughout most of next year, things will be improving, combining declining inflation with recovering economic activity. Of course, these are projections. They depend a lot on what happens in the world economy. This takes into account that the global economy will be slowing down during next year. But compared to the COVID-19 crisis, the current cycle is not as synchronized as it was at that time, and there is room for countries to reflect the different paths of economic policy. And given that Chile started early on, it is likely that it will recover early on as well. Markets are validating these prospects of declining inflation. At some point, we fear that inflation expectations could be de-anchoring, but they are since the last couple of months, they have been declining and returning or moving closer to the policy target. And I believe that as we move ahead with fiscal or with inflation stabilization, this will complete its convergence towards a policy target. Now, there has been a lot of discussion about what it means for the Chilean economy to have a negative growth figure for next year. In our view, that is basically reflecting a pattern of economic adjustment that has been different from other countries in the world, particularly with the overexpansion of 2021. So when we bring together, or when we average out 2020 to 2023, you will see that Chile is pretty close to the average growth that is statistically related to its per capita GDP. There you have the combined figure for Chile as well as for a number of countries in the world. So in the same way that we expanded beyond potential in 2021, we will adjust in 2022 and 2023 to average out something that is pretty close to where we can be expected to be given our degree of development. And continuing with the normalization process of the Chilean economy, public debt will stabilize at about at a slightly more than 40% of GDP towards the end of the current administration. That is based on the the policy path that the government has defined. As many of you know, the Chilean fiscal policy is defined on the basis of structural budget targets, and these structural budgets point towards further consolidation in the next 3 years above the major consolidation effort of 2022. So we will end this period moving towards a stable economy with stable public finances, and that contrasts with the fears that many had on the Chilean economy at the outset of the COVID-19 crisis, that we entered as a very open economy, and every time there is some kind of turmoil in the world economy, Chile is always at the top of the candidates to being hit by that. But fortunately, we have a number of shock absorbers that help us navigate that, and this is very much the case in the current cycle. In addition to that, you may remember that we entered the COVID-19 crisis with an economy that was weakened by the economic effects of social unrest of end 2019. Given that the recovery in 2021 was fueled by massive fiscal transfers and pension fund withdrawals that injected some 35% of GDP into households, the overheating of the economy has been a major challenge that it has been the major target of monetary and fiscal policy in the course of this year. And then the economy will continue normalizing well into 2023. From 2023 onwards, economic developments will depend on the reform agenda that I will address in a minute, and the ability to reap on new emerging opportunities that we will mention later. So on the reform agenda, the economic reform agenda is comprising, of course, tax reform, pension reform, recently announced measures to foster investment, and an agenda to improve productivity that we will unveil at the beginning of next year. So on the first issue, tax burden in Chile is comparatively low in comparison with more advanced economies, and has remained so for a pretty long time. After the tax reform of 1990, in the transition to democracy, right after that, the tax burden has remained pretty close to 11.5% of GDP for more than 30 years. And this has become increasingly a bottleneck in addressing social needs, in addressing demands for stronger social protection, and the current tax reform that is being discussed in Congress is aiming at generating fiscal revenues that will be mostly dedicated to improve, to enhance social rights and to improve public investment. So you see in the chart on the right that most of the tax reform will increase the tax burden on households, will bring tax revenues from personal income tax closer to more developed economies. Still, there will be a gap. That gap is reflected by the difference between the bar and the point in each one of each one of the parts of that chart. So you see that for personal income tax, for corporate taxes, and for the tax to GDP ratio overall. Overall, we intend to raise tax revenues by 3.6% of GDP over a horizon of 5 years. We are aware that is an ambitious target, and in order to do so, we are articulating reform around a number of components on personal income taxes, wealth tax, the reduction of tax exemptions, mining royalty, and corrective taxes. And for each of those, we have a matching direction of, or matching expenses, so that investment in social protection will be funded mostly from personal income taxes, while the mining royalty and corrective taxes will fund investment in research, development, innovation, and funding for local and regional governments. Tax reform is making progress through Congress. We currently have two major bills in Congress. On the lower house and Chamber of Deputies, we have the bill on personal income tax, wealth tax, and reduction of tax exemptions. The mining royalty is being discussed in the Senate, and early next year we will introduce legislation on corrective taxation. As soon as I get back to Santiago, I will move straight from the airport to Congress in Valparaiso with some of the senators and deputies that are joining us today to continue discussion on these issues. Now, in assessing the economic impact of tax reform, it is important to look not only at the impact on the revenue side, but also what we're doing on the spending side. And the expenditure side of tax reform, in addition to funding the basic pension that is part of pension reform that I will address right away, it will also fund an expansion of social care that will free up resources or labor market resources to produce in the future, and also to increase investment in research and development to meet the government's targets to triple government investment in research and development in a matter of a few years. So when you combine those two sides of tax reform, the revenue side with the expenditure side, you end up with an overall positive balance on economic activity of a little more than 1% of GDP. On pension reform, we are aiming at building a true multi-pillar system, adding a social security pillar to the existing individual capitalization pillar, and with the recently created basic universal pension. So with that, we will have a truly mixed system. We will have mixed funding from employers, from workers, and from the government, with 3 or 4 different pillars, including the voluntary pillar, and with public and private managers of pension funds. So with that, we are aiming at increasing the value of future pensions and also to improve on current pensions. The table in the middle summarizes what we expect on the future pension side, with an increase of nearly 45% in the value of the average value of pensions, combining the increase in the basic universal pension, a stronger return on individual or workers' contributions to individual funds, and with the social security component funded by employers. This will also generate further savings to be invested in the local capitals market that lost some 20% in the course of pension fund withdrawals. So with an enhanced private capitalization pillar, plus the build-up of reserves of the social security component, that will bring the pension assets to GDP ratio back to where it was before the pension fund withdrawals in a matter of 7 to 10 years. It may sound long, but without pension reform, it will take probably twice as long to recover from these pension fund withdrawals and to recover on the domestic capitals market. The government has also unveiled an agenda to foster investment. There are a number of tax incentives for investment, for private investment. There are a number of measures to improve on the effectiveness of public investment. I cannot go into the full details of that, but let me just mention or single out some of the tax incentives that we are integrating into tax reform. So we are including a fund of tax credits for projects that have a higher multiplier effect and also a green impact on the economy. We are also including temporary semi-instantaneous depreciation for the next couple of years. We are extending the reduction in the corporate tax for small and medium enterprises, and we are also including a number of incentives for increasing productivity, including a development rate that can be entirely discharged by corporations on the basis of investment on their own productivity increases through research and development, workers training, certification of processes, and a number of other issues. Another measure that we are including in tax reform is to include a depreciation as part of the operational margin of the mining industry in determining the mining royalty. And we are also including a tripling of the benefits for corporations to invest in research and development as well. So there are a number of new features that are being included in tax reform that will enhance and will foster investment and also productivity. Now we have a productivity agenda that is being built alongside with the Ministry of the Economy that includes some reforms on red tape for investments, to improve the operation conditions for productive small and medium enterprises. We are including the public faith type of regulations, notary publics and ownership or property registries to improve business environment and strategic sectors and address labor informality and to improve on workers' training. So, well, when we discuss economic developments, it is usually to hear that economic reforms are necessary to foster long-term growth. That is exactly what we are trying to do, perhaps through a way that may sound a little different from the conventional orthodoxy. But our reform agenda is aimed at building a new social contract and to set the basis for sustainable, inclusive growth. And all the major components of this agenda, be it either progressive personal income taxation, multi-pillar, pension systems, social care, public health, can be very much traced to well-known building blocks of social protection and innovation systems in market economies elsewhere in the world. There's nothing radical about what we are doing in Chile, other than just, what looks more radical is the contrast with the framework that we have lived with over many years. And we believe that in moving in this direction, we will be able to address a number of challenges that the Chilean economy is facing, not only on the social front, but also on the economic front. The fact that economic potential growth has been declining over 15 years, that productivity is stagnant over a decade, suggests that there is something that is not working well with productive development, with economic development, and we need to address that, and we will see in a minute how we are trying to do that. On future prospects and emerging opportunities, I have to do with this. Well, Chile is one of the safest and more stable countries in the region on a number of dimensions: legal risk, tax policy risk, labor market risks, infrastructure risks. But what is new? What are the good news for Chile today is that the greening of the world economy is benefiting our country. It is doing so on the grounds of demand for the products that we export, for copper and for lithium. There you have charts that indicate the expected demand for those two products. On the basis of that, we have a number of projects that once they go through the environmental sustainable analysis will level out investment in the future, especially in the energy and mining sectors. Government has an ambitious infrastructure plan with public-private partnerships that is currently under development. We are integrating further into the world economy through the approval of CPTPP in Congress a few weeks ago, on the progress on the negotiation of the modernization of the agreement with the EU, with joining full membership of the Development Bank of Latin America, CAF, and a number of other issues. The Economic Secretary to the Treasury mentioned also our financial markets MOU with the UK. In Chile, we have also been investing in digital infrastructure and connectivity to provide the services to the world. On a number of indicators, we are leading Latin America on connectivity and the basis for the digital economy. And we are undergoing a number of regulatory and legal reforms that will open up financial markets for new participants. The financial innovation law that was just mentioned, the open finance chapter in the financial innovation law, both will come into full fruition in the next few months. We are making progress on the internalization of the Chilean currency. We have legislation through Congress to help on that, in addition to a number of measures that have been taken by the central bank. We also introduced legislation on increasing the resilience of the financial system and infrastructures. So we are broadening central bank liquidity services to financial infrastructures and the larger financial cooperatives. We are still working through the four-part model for retail payments, on pension fund management, the splitting up of account management or the back office components or parts of what pension fund administrators do with the investment management services will further open up opportunities for new entrants to provide investment management services to Chilean workers. The derivatives market is modernizing. There are a number of new regulations that are being implemented, led by the central bank. And at the Ministry of Finance, we have a market makers program for government bond issuances that will continue growing into the future. So it is interesting to note that even after a major shock to the financial market that was, the pension fund withdrawals. The agenda to increase competition for financial services is broadening, and it's a very important part of the government's agenda that our ministry is particularly committed to. Now, on financial markets, it's also important to note that the allocation of local pension funds to domestic equities has rebounded, but we have a very attractive valuation indicators, and on top of that, the fixed income market has reactivated as well since the beginning of the year. So our capitals market is generating further opportunities to investors, and also we have great opportunities on green growth from the supply of critical raw materials that I already mentioned, the targets on the reduction of carbon emissions and carbon absorption, almost unlimited renewable energy, and the development of the green hydrogen industry. So on energy generation, Chile is moving from being almost entirely dependent on imported fossil fuels towards becoming self-reliant on renewable sources of energy. We are currently midway through that. We already exceeded 50% of our energy generated by renewable sources, be hydro, wind, or solar power, and in a matter of 10 years, we will be entirely reliant on renewable sources of energy. That will mean a major shift on the Chilean economy and will generate a new comparative advantages in a world that is undergoing this major shift. Now, in order to ensure that the benefits, the windfalls from stronger commodity prices is invested back into the economy, the Chilean budget is now building a sort of retrofitting into research and development into the green hydrogen industry, very much in the way that is indicated in this slide. So in the budget for 2023, all revenues from the lithium industry that enter Corfo, our development agency, will be reinvested in green hydrogen, in research and development, in the broadening of our productive matrix and support for small and medium enterprises. So we'll not spend away the windfalls, but rather reinvest them in strengthening the Chilean economy. The green hydrogen industry in particular is, if we believe at the current projections, has the potential to match the size of the Chilean mining sector once it gets fully developed. Of course, this is not instantaneous. It will take nearly a decade to develop a proper green hydrogen industry, but we are taking the appropriate steps. Only a few weeks ago, in the context of COP27, we signed an agreement with the World Bank, with the Inter-American Development Bank, and with the German Development Agency to support us in developing green hydrogen on the policy and the infrastructure side. And we have many indications of interest and early investments in this industry by private investors. So this will make an emblematic case for productive transition. I cannot go into the full details of that in the light of time, but let me just finish by saying that after more than a decade of declining potential growth and stagnant productivity, Chile can largely benefit from the technological change and the greening of the world economy. This will add to well-known institutional strengths, an open economy, and a deep domestic capitals market, and the government's agenda is well aligned with this with this orientation, including strong commitments to environmental sustainability, to inclusiveness and productive diversification. Recent and ongoing measures will open new opportunities for competition in financial services, and private investment, domestic and foreign, will be key in realizing these opportunities. It's something that will not be done by government itself. It will require a strong contribution from the private sector by bringing innovation, technological development, and competition to the Chilean economy. So, but these investments, research, development, and innovation can draw from incentives that have been recently announced by the government, and some of the productivity agenda that will be publicized shortly. In sum, Chile is well into the macroeconomic rebalancing that it needed to do. It is, at the same time, is tackling strongly needed reforms in a responsible way, and it is facing new opportunities where foreign and local investors can participate and join in, I believe, what can be a new stage of development for our country. Thank you very much.
Well, Minister, thank you very much for that very comprehensive presentation on the Chilean economy. I think you laid out very well a lot of the opportunities that are there in front of Chile, that I'm sure a lot of people in the audience would be excited by. As you know, I was in Santiago last month and had the chance to talk to a wide range of people in business and private sector. And I did pick up a bit of concern about the tax rises and about insecurity and about political uncertainty around the new constitution. And this sense that Chile, that for so long was the angel, if you like, of the emerging markets, that its halo had slipped a little bit, no? Se le perdió la aureola. So, Minister, has Chile lost its halo?
Well, I would say that we have undergone three challenging years, starting with the social unrest of late 2019. And I think that this has fostered a transition that, like every major transition or transformation, involves some additional degree of uncertainty. Of course, this combined with the worst global crisis that we have known in our lifetime. So that was an environment where perhaps it was easier to lose direction. But rather than that, I think that Chile is undergoing an important transition on three levels. At the macroeconomic level, like many countries that are coming out of this major economic shock of COVID-19. Secondly, we are undergoing a political transition that is partly reflected on the constitutional process, but also on the political change after the general election last year, and also a productive transition, because we were used to think of Chile as an economy that relied a lot on raw materials and natural resources, and that they had little to do or limited room to move in further developing. But right now, because of technological change and because of the richness of natural sources of energy, I think that there is a new horizon opening ahead of us. Of course, that process is not free of risk, and there are many things that we need to do. We need to complete the constitutional process. We need to start to further stabilize the economy. We need to foster investment. We need more private investment in the economy. But I think that we have made substantial progress so far, and I think that that's a good point to
Yes.
look into the future.
And Minister, if we think about the political process for a moment, the new constitution, there's still quite a lot of uncertainty there. We have a panel next about the detail of that, so I won't ask you about that. But just on the timing, when do you think investors could expect to see this constitutional process finally wrapped up? When's it going to end?
Well, we are in the middle of negotiations, political negotiations. Probably we will have further news this week. It is difficult to guess. I'm sure that the members of parliament that will join in the next panel will have much more to say. But part of the discussions have been aiming at sort of shortening the process that will follow suit. The previous convention, for instance, out of a whole year, took the first 3 years to agree on their internal regulations. I think that part of the negotiations that we have seen so far point towards having that regulatory those rules of the game set up right at the time when the new constitutional body starts working. Also, there has been a political agreement on some of what people have called the borders of constitutional reform. So I think that there are a number of features that point towards a commitment to a more effective process this time.
Do you think it's 1 year, 2 years, 3 years, 4 years until this is all done?
It's difficult to guess, but I would say that putting together what remains of these negotiations, plus the electoral process that should follow, and then an exit, then the work of the constitutional body and an exit referendum, probably that will take us until the beginning of 2024.
Right.
But the important thing about this is that once we complete that process, we will have a constitution that will be able to represent much better Chilean people, that will be able to acknowledge some of the changes that not only Chile, but the world as a whole has been facing.
Yes.
And that will put us in a better place to look into the future.
And if we can turn to your tax reform for a moment, I mean, you said there's nothing radical that we're doing there, and it's true that Chile's tax burden has been low relative to the OECD average, but I think that the figures you showed there suggested that actually the burden on corporates is rising, and it's already above the OECD average, no? According to the figures you had there. Aren't you a bit worried about the impact on companies from this tax reform?
Yes, well, the largest component in the increase on corporate tax burden there is associated to the mining royalty, because on the reform of income tax, the only features that would increase tax burden are those that are mostly related to the reduction in tax avoidance or tax. Basically tax avoidance. So still the heart of the reform is more concentrated on personal income tax and wealth tax. So it's more concentrated on individuals rather than corporates.
But a wealth tax is quite radical, isn't it?
Well, I think that well, there are a number of countries that have a wealth tax. Of course, it's not as generalized as a personal income tax, and it's a feature that is basically aiming at increasing the progressivity of the Chilean tax system. Now, we still have, I mean, this is a component of tax reform that has not been discussed yet at the Finance Commission and the Finance Committee of the lower house, whose chairman is here with us. So in the next few weeks, we will go further into the discussion of that.
So it might not be passed?
Well, we will, I mean, I think we have a good case for that. But what is important on tax reform is to be clear on what are the goals that you are trying to achieve. So in the case of Chilean tax reform, our goals have to do not only with increasing tax revenue, but also on making the Chilean tax system more progressive. And by progressivity, we mean not only the shape of the tax schedules, but also in bringing down tax avoidance that people feel very hardly as very unfair, right. That some people have the resources to avoid the taxes that other people pay on an everyday basis.
Right. And if we turn now to opportunities, you mentioned two key trade deals, the CPTPP for Asia and the deal with the EU that was agreed just a couple of days ago. When you're in Chile, you're straddling, if you like, Europe on one side, the Pacific on the other, and Asia. When you're looking to the future and future sources of growth, trade, and investment, are you thinking more Asia these days? Are you thinking more Europe? I mean, how does it look to you, sitting in the middle between those two?
Well, I think it's great to sit in the middle of that because I think that diversifying trade is key to a more sustainable economy. Of course, when you're diversified, your trade structure reflects the different speeds at which economies are growing. So Asia and China in particular took a larger part of our trade expansion in the last few years. But I think that right now we need to be prepared to navigate a world with considerably more trade tensions, trade disputes among the largest economies. So I think that for us, to be diversified and also joining a group of countries that are not aligned with these disputes, but are rather like-minded countries compared to us, like CPTPP, can provide a further opportunity to integrate better into the world. Of course, CPTPP has to work like that. It was not originally designed in that way. It was more of a trade agreement plus an investment protection agreement, but the institutional arrangements within CPTPP create ground for the member countries to operate more as a bloc in a world with greater trade tensions like the one that we're seeing today.
Right. And if we're looking at the sources of growth, you mentioned the metals for the transition economy, copper and lithium, where Chile has big reserves, and green hydrogen, which is a very exciting opportunity. But of course, it's an opportunity lots of countries around the world are looking at. It's going to be very competitive. And almost every week you see a different country pop up and say, we want to be a big supplier of green hydrogen. And the Biden administration has put in place some very big subsidies for its domestic green hydrogen industry. How do you think Chile is going to be able to compete with those US subsidies in particular and with other countries trying to be big players in green hydrogen?
Yes, very few countries in the world can match subsidies in the US when they decide to do that. But what I would say is that first of all, the natural basis for clean production, and particularly for green hydrogen in Chile, is considerably stronger than in other countries. We combine solar and wind power in the same country. But in addition to that, in order to foster investments, what we are including in our tax bill, that is this pool of tax credits for investments with a multiplying effect, is something that can be drawn for this kind of projects. Of course, we still have to approve that. We expect tax reform to be passed by the first half of 2023. Of course, we will still have to move from the lower house to the upper house that we have on that side of this room. well, also it's Senator Lagos there. I think it's important to acknowledge the sort of balance that we're trying to strike there that will generate some additional opportunities for this kind of investments.
Right. And then you mentioned that Chile is at the moment an importer of fuels, and of course the Ukraine war has had a big impact globally. In the case of Chile, how much do you think the Ukraine war has cost you this year in terms of extra fuel, food, economic growth costs, extra subsidies needed? What do you think has been the economic impact on Chile of the Ukraine war?
Yes, well, if we look only at the operation of this stabilization mechanism for local fuels, we have dedicated some $2.6 billion to that. Given that it's a stabilization mechanism, we can recover that later, but of course that gives you a size of what it basically means, which is close to 1% of GDP. Of course, the impact on private activity is larger than that. We have also been hit by the increase in the price of food. That has required the government to add some social protection measures worth $1.5 billion more. So at least the fiscal side of the cost has been substantial, but the good thing is that we have managed to do that within the fiscal envelope that we had for this year. So we have not compromised on the fiscal consolidation effort that we were committed to.
And you mentioned there the price rises. I mean, inflation has been more stubborn than expected. I think the year to November was just over 13%, which was a bit more than people had thought. Are you really confident you're going to get it down to sort of near 4%, below 4% next year?
We are, because we think that both monetary and fiscal policy are contributing to that. Both policies impact the economy, impact demand and prices with a lag. But on top of the cooling down of domestic demand, we will have a number of factors that over the last few months pushed up prices, but will begin operating in the opposite direction. In particular, commodity prices are down from its peaks back in May this year. That is the international prices of vegetable oil, wheat, corn, and of course fossil fuels. So all of that is currently down from their peaks, and in addition to that, we have a strengthening Chilean currency, so the pass-through from the exchange rate to domestic prices will start moving in the opposite direction that it did in the last few months. So in the same way that we have everything pointing towards higher inflation in the last year, we will have a number of factors that will be pushing down inflation in the next year or so.
Okay, thank you. And I know we're running short of time. Everyone's keen for their break, but maybe a last question, Minister. I know it's been an ambition for many years in Chile for the country to escape the middle-income trap and become a fully developed economy. And there have been setbacks, obviously, in that path with COVID and the recent difficulties with the Ukraine war. But do you still think that's a viable goal? And how long do you think it might take for Chile to join the ranks of the fully developed economies?
Yes, well, for many years we read and wrote about the middle-income trap. I think that we have lived through that in the last 3 years, or perhaps longer than that. It's just that we didn't realize that was happening. I think that the reference to middle-income trap also speaks to the growth of the Chilean middle class, that was faster than in any other country in Latin America, and that brought new demands, new standards, new aims or ambitions to people. So it will still take a few more years to move towards a new stage in development, but I think we are reassured by the fact that on these three dimensions or these three transitions, in all three of them, we are making good progress. We are no longer, we are no longer working through the fog of the middle income trap. We start seeing we're getting closer to where we would like to be in the future, but of course we will need a lot of commitment, a lot of persistence, a lot of dialogue between the private and the public sector, a lot of dialogue in the political system to make the full or to complete these three transitions. And the good thing about Chile Day in London is that we can compare to where we were a year ago. I think that a year ago we had still a lot of uncertainty of what would happen. I hope that a year from now we will be able to say that we have reached our goals in stabilizing the economy, and we will have made further progress on this political and productive transition.
Thank you. Well, I look forward to talking with you at Chile Day next year about the progress we've made on those topics and on the development of green hydrogen and lithium and copper. But Minister Marcel, thank you very, very much for sharing with us your thoughts today.
Thank you.
Thank you.